we're showing, given the quality of the company, the quality of our balance sheet, the quality of our execution, we're getting access to the debt markets as well as the private equity markets.
I'm here today with Owen Thomas, Chairman and CEO of BXP. To what extent is BXP seeing acquisition opportunities or the chance to dispose of properties in the current market?
Well, Diane, we have a fair amount of distress going on in our space, more with the private companies than the public companies that have access to the bond markets. And there are opportunities that are presenting themselves. At the end of the year, fourth quarter last year, first quarter this year, we actually bought in major stakes in 3 assets that we had with joint venture partners at, we think, attractive prices, and we're excited about all 3 of those deals. And since then, we've been in lots of conversations with lenders and institutional owners of properties to try to develop more acquisition opportunities. And I don't think, our industry can go through this kind of period of time without a number of those generating themselves. In the last downturn, BXP was able to add to during the GFC, was able to add to its portfolio buildings like 200 Clarendon in Boston, 100 Federal Street in Boston, 510 Madison here in New York. So I think something similar to that will occur, in this cycle over time. In terms of dispositions, we have a few, land parcels we're selling to residential developers and things like that. But in general, if we're buyers, we're probably not sellers because we don't love the price. So I don't see disposition activity being particularly robust.
And can you point to an aspect of your latest earnings report that you feel especially highlights BXP's broader strategy?
Well, a few things. It was a good quarter. We met our FFO earnings expectations, which is always important. But also a few other things. So our leasing was about 880,000 square feet for the quarter, and that was up 30% from the first quarter of 2023. So that was a great start. And I think that's a reflection of the quality of our buildings and obviously the quality of our execution. So we were, and I think that's absolutely central to BXP's strategy. Second, we had a few other capital raisings that I think demonstrated our access to the capital markets. So we started for the first time a $500 million CP program. So we added $500 million of floating rate debt to our balance sheet. We refied an existing loan. The cost of that was SOFR plus 50, which is very attractive and, again, demonstrates BXP's access in the capital markets. We also closed the second part of our significant joint venture with Norges. They bought a 45% interest in a major lab development that we're doing in East Cambridge. And the capital that they put into this one project was over $500 million, and the cap rate upon stabilization is about 5.9%. So again, we're showing, given the quality of the company, the quality of our balance sheet, the quality of our execution, we're getting access to the debt markets as well as the private equity markets.
And is there a common theme or question that investors are raising? And if so, how are you responding?
Well, the question that we get asked over and over again today is about our occupancy, because we're running now about 88, 89%. When things are more stabilized, I think we can run at 93%. And just leasing up our buildings, which is not a small amount of leasing because we own 53 million square feet, that's a very significant increase in our earnings per share. So I think shareholders rightfully are very focused on the occupancy trends and are looking for us to bring our occupancy up. And the good news is our big message at Nareit is our leasing has improved markedly, even in the last month. So about a month ago, we announced earnings, and we mentioned on our earnings call that we had 850,000 square feet of leasing for the second quarter that was either signed or was in negotiation. And that number 1 month later, which is today, is 1.7 million square feet. So that's a very significant increase. And then the leases that we're tracking, that we're trying to bring into that basket, that went up about 20% or 200,000 feet. So again, I think it's a reflection of the execution that we have, the quality of our portfolio. But what we've always been saying about leasing, the market's very focused on work from home, which I understand, and I do think work from home is important. But what really drives our leasing is earnings growth, because our clients are corporations, they're not individuals, and when their earnings aren't growing, they're not hiring people, they're not leasing space. And in 2023, S&P 500 earnings growth was flat. In 22, it only went up 3 or 4%, but in the first quarter of this year, it went up about 5.5%, and that's falling now, we think, into, or demonstrating enhanced leasing for our company. So we're very excited about that.